Welcome to this Strategic Market Intelligence Explainer. Today, we're cutting right through the noise and focusing our lens squarely on the global PA6 and PA66 markets for the fourth week of July 2026. Look, if you're an executive or a procurement pro navigating these complex polymer supply chains, you already know that having the right data at exactly the right time isn't just a nice-to-have, it's absolutely essential for your bottom line. So let's take a premium, data-driven look at what is actually happening out there in the global nylon bazaars.
And just a quick note before we dive in, all the insights we're unpacking today come straight from the highly respected Polymer Bazaar weekly report. When you're making high-stakes procurement decisions, you need unvarnished, authoritative intelligence. That's exactly what this data gives us, a crystal-clear look at price, prediction, and profit across the whole global landscape.
Here is our roadmap for today. We'll start with the market overview and feedstock. Then we'll hit the Western markets, covering the USA and Europe, followed by the Eastern markets, looking at China and India. After that, we'll check the global buying pulse and wrap up with our strategic purchase opinion.
All right, let's kick things off with Section 1, Market Overview and Feedstock.
To really understand the downstream squeeze manufacturers are feeling right now, we have to start at the foundation. Let's look at the baseline out of China. For nylon 6 and 6.6 feedstock costs, we're seeing caprolactam sitting right at 11,950 RMB per metric ton. And right next to it, adipic acid is priced at 8,300 RMB per metric ton. Now, these aren't just arbitrary numbers. These baseline costs out of China act like a gravitational pull for global pricing pressure. So keep these figures in the back of your mind as we move forward.
Moving right along to Section 2, let's check out the Western markets, specifically the USA and Europe.
Over in the USA Bazaar, we're seeing a really fascinating contradiction, especially with PA6. Get this, cyclohexane prices actually went up by 18 cents per gallon. That inherently drives up production costs, right? But despite that cost pressure, consumer demand for PA6 remained totally dull. It proves that even with rising bills on the production side, buyers are just refusing to blink. Meanwhile, the PA66 market is playing a much more defensive game. Adipic acid gained 3 cents per pound, and buyers reacted by pulling back and procuring strictly on a need basis. It's a very cautious posture.
And you can see exactly where the market is settling amidst all that tension. Just look at this massive gap. Despite those fluctuating feedstock inputs, USA PA6 prices are recorded sharply at 18 cents per pound, while PA66 is sitting dramatically higher at 171 cents per pound. That massive spread really highlights the drastically different supply chain realities for these two polymers in the US right now.
Let's cross the Atlantic. Europe is dealing with its own unique brand of friction. For PA6, it's a total standoff. Demand is weak, which would normally send prices cratering, but supply is remarkably tight. So it's this constrained market keeping itself entirely in check. On the flip side, European PA66 is seeing really dull offtake from end users, but unlike the US, the feedstock costs over here have actually remained stable.
So, what does this unique friction mean for the final price tag? Well, because that tight supply is acting as a counterweight to the weak demand, European Delivered Duty Paid, or DDP, Northwest Europe prices are locked in a secure holding pattern. They are holding completely stable and unchanged at 2,100 euros per metric ton for PA6 and 2,795 euros per metric ton for PA66.
Shifting gears to Section 3, Eastern markets, focusing on China and India. Over in the China Bazaar, things are getting pretty defensive. For PA6, feedstock costs didn't budge, but processors are still facing incredibly strong resistance from buyers on current prices. But the PA66 market, that's experiencing something much more severe. Production costs stayed high, and since manufacturers can't just pass those costs onto a resistant market, they're taking drastic measures. Processors are actually having to hit the brakes and lower their factory run rates. They're literally slowing down the machines just to avoid churning out expensive inventory that nobody wants to buy. So whether it's pure buyer pushback on PA6 or those actual factory slowdowns we're seeing for PA66, the bottom line in China is inescapable. Demand is just persistently dull across both markets right now.
Now, jumping over to the Indian Bazaar, we're tracking a very consistent regional spread. If we look at spot prices, excluding GST, Mumbai Nylon 6 is assessed between 218 and 220 rupees per kilo, with Delhi commanding just a tiny premium over that. And we see a similar, although much tighter pattern for Nylon 66. Mumbai is quoting at 305 to 306 rupees per kilo, and again, Delhi shows a very slight premium. It's a highly predictable regional difference.
Section 4. The Global Buying Pulse. Let's look at what buyers are actually doing out there.
When we zoom out and look at the macro picture controlling the global trade winds, it's actually really clear. The market is overwhelmingly driven by weak downstream demand. But here's the kicker. There is absolutely no panic in the air. Why? Because availability is ample and buyers are sitting pretty on comfortable inventories. Because everyone has enough material for now, spot prices are staying largely range-bound. The only real momentum we're seeing in the bazaar at all is coming entirely from processors making highly calculated, strictly need-based purchases.
Which brings us to our final section, Strategic Purchase Opinion.
Polymer Bazaar really hit the nail on the head with this analysis. They noted, quote, with higher availability and dull demand, traders might lower their prices. It's basic economics, right? When you have high supplies slamming into low demand and buyers are already sitting on comfortable inventories, well, the pressure is 100% on the sellers. Right now, the leverage sits squarely with the procurement side.
So based on all the data we've unpacked today, here is our final strategic verdict for late July 2026. We strongly suggest strict, need-based buying. Seriously, this is not the time to build up speculative inventory. If you use caution and precision right now, you'll be perfectly positioned to take advantage of potential price softenings if traders decide they need to lower their numbers just to move volume.
Now, if you're the kind of professional who needs to track these minute-by-minute shifts in the global markets, you absolutely need to go directly to the source. You can grab deeper market tracking and continuous updates at PolymerBazaar.com, or just reach out to their intelligence desk directly.
I want to leave you with a question to chew on as we wrap up this explainer. You've seen the data, we've got stable, range-bound prices over in the West, but we are seeing actual physical tightening of factory run rates in the East because of cost pressures. Knowing that this specific friction exists in the global supply chain, how are you going to adapt your own PA6 and PA66 procurement strategy for August? Are you going to hold the line on need-based buying, or are you secretly preparing for a shift? Thanks for joining me for this market intelligence briefing. Stay focused, stay informed, and I'll see you in the next explainer.